Checking one, two. Yes, sir. Making sure we're good. Let's move this camera a bit and let's make sure we're doing well over here. All right, all right. It seems like I'm good to go. It is I am live. Good afternoon, my fellow simpletons and degenerates. Um once over here I'm live. Hopefully you guys will be watching me. I know that I said I was gonna go on at 5 p.m. California time, but I was unable to due to the fact that I was getting stuff ready for the kiddies for tomorrow since school is underway and we had to go and shop for some school supplies for them. However, I am here and ready to go for another week of seeing what the stock market is going to bring us and give us. Um, I am the savage of Wall Street. Why? Because I am a sav. I don't care whether the market goes up or down. I make my money. I take advantage of any and every opportunity. When there's blood in the streets is when I strike, and I am the happiest. Welcome to my channel, and hopefully you guys are ready for another week of opportunity that the markets will bring us. So now, welcome, my fellow simpletons and degenerates. I did say I was going to go on live at 5 p.m. California Standard Time. It is 23 minutes past that hour. I apologize for being a little late. However, I have little ones and school is starting for them, so I have to kind of run around and grab school supplies and also uh, this is the birthday weekend for another one of my children, and it's a lot going on. But I am here now. Let's see what's up. Let's see who's here. There's not too many of us here at this moment, but you know what? Here we are. Mando number 5 is in the house, saying he is number 1. In fact, he is number 1. Cannon Fodder is in the house, saying greetings. So what is up, my dude? Uh, Mando number 5 is saying hello, and Stock Option Sensei is in the house saying hi. I think there's other people here, but we'll keep it going, man. The more the merrier. However, we do know that it's only a sliver of a percentage as a whole that trade options, especially options the way we do it. We are not the gamblers. We are the casino. And so Ken's mom is in the house. Happy birthday to the little savage. I will tell him that. Ken's mom, thank you for watching once again. Moneymaker Juan is in the house saying good evening. Good evening, my dude. Um, how are you guys? I hope you guys are doing well. I hope you guys had a great weekend and are continuing that weekend right now. Hopefully, you guys spend some good time with a family or significant others. I hope you guys were able to take in a nice movie or a show. You guys went out to like a nice restaurant, or even if you stayed in the house, you made something delicious to eat. And more importantly, that you enjoy your time. And even better if it was paid for by gamblers' money. I love that. B. Tram is in the house saying, help. How can we help you, brother? I'm sure you were probably trying to say hello. So, B. Tram, hello. I don't know what to help you in if you were asking for a 911 there. I suggest you call the cops. I can't. Your friend Savage can only do so much. I can assist you on how to make money. I can't get the cops to your house. So I think on that one, you're on your own, my friend. However, if it's about money, I got you. Um, so earning seasons is upon us, and one of our savage stocks got hit. Um, I think some information got leaked, and they released ahead of time. C3.ai seems like it's taking a little bit of a hit at this point. It took it on the chin, and it's down. I think like 15%. Last time I checked, it was $19 out. Whoa, it's actually 17.87 right now, down 19% since Friday. So after hours Friday, I think news came out and you know down almost 20% on news that weak quarter 1 results, and obviously the leadership shakeup, lagging a strong tech market as investments react to ongoing uncertainty. So preliminary Q1 operating loss of up to $124.9 million cannot be good. So I know that Tom Siebel also said that he was sick and he's stepping down as CEO. It doesn't help. However, the fundamentals are the same. The fundamentals are the same. The company is still the same. 99.9% of the people of that company are going to be the same. They're going to keep in the same business. It's just overreaction. It's the way that I see it. And I've been trading this stock enough to know that it's taking it on the chin. However, when people are scared, jumping ship because they really don't know what they hold, is when they sell. Also, I wouldn't let pre-markets and after-hour markets dictate where you're going to be, because not many shares need to be traded um, to move the market, right? To move the shares. I mean, not many shares need to be traded to move the stock up and down. Only 121,000 shares were sold after hours overnight, and it's down quite a bit. So take it with a grain of salt. I suggest that you take advantage of the volatility. You take advantage of this overreaction that the market is having, and the paper-handed weenie babies that are selling, so that you can come in on Monday and perhaps take it in a nicer position on C3.ai, which is actually a really good company, very good stock, and is just one of those where you have opportunity right now to go in and buy a crap load of stock for cheap. Um, C3.ai has been here before. It's been in the 11s a couple of years ago. Unity was here, a little over a year ago. People were trading at the 12, 13, $14 range. It happens. Stocks go up, stocks go down. This is why we sell covered calls, right? This is why I sold C3.ai, I believe, $35 covered calls expiring 2026. And then when the stock ran, I decided to roll those to 35s in 2027. I rolled some 35s to 40s, and I took in more money. I took in like $2 per share. So I think my overall average credit was like, I think $13 on one and like $9 on another. At this point, I'm looking to buy those back. I'm probably gonna go buy those. I'm gonna put some stink bits out there for like $2 maybe, or like 150. I'm gonna take in probably maybe $1,000 of credit per for every 100 of those shares. I mean, that's how you make money selling covered calls, right? Conversely, I'm going to go in and I have $25 cash secure puts that are expiring September and October on C3.ai. So I may roll those, instead of 25s, I may roll them to 2250s, expiring January, and I'll take in $250 back from my collateral, and I'm going to probably try to get some premium while at it. So just kick the can down the road. Bottom line is, I'm probably going to take some more money and sell some cash secure puts. This time, I'm probably going to do some 1750s, and I'm looking at January 2027. There's some 1750s that I believe we're giving you 880 on Friday. So those are easily going to be like $11 tomorrow. The stock's at 1784. And if they want to give you $10 to $11 for a 1750 contract, I mean, damn, that's well over 50%. Well over 50%. That's 60% that they're giving you or more in premium to buy the stock, at 1750. So realistically, you would be buying it under $10. That's insane. Um, I'm looking for that. So that's where the money is. What else do we have here? We have Stock Option Sensei saying, "Can you make the QQQ stay below 573 until end of day Wednesday?" I'll see what I can do, my friend. Tom Kaufman's in the house saying, "Hey, Savage, what's up, Tom? Good to see you, my man." So, I mean, that's the opportunity with C3.ai, tomorrow. What else is going on in the world of investing? Well, we have a market that is just relentless. Um, I think stock futures is actually bright. I look at. It seems like stock futures is actually green on the Nasdaq, and I'm very curious to see what happens on that. Let's see, another one of our favorites, Webull. Webull looks like was in the green after hours. It's trading around you know $50 a share right now. I'm kind of bullish on Webull. So I want to see what the stock gives me tomorrow. Um, I'm very, very curious to see what C3.ai is going to do tomorrow, though. Just because the stock honestly has no business being down here, but like I said, my little bear is out here. Earning seasons are not the greatest. I was feeling bullish last week when it came to some of our stocks because the market, that's what it was dictating. We had some good moves, right? We had some good earnings and we had some not so good earnings. But at this point, I am extremely, extremely bullish when it comes to C3.ai, man. It being down here, it seems like a no-brainer to just add to my position. This is when you go in and you add. The stock was just $29 like a couple of months ago. Nothing has changed. They're still doing business the same way they were doing earlier, right? The fundamentals are still the same. Tom Siebel just came out and said he's sick and he's stepping down, but I assure you the person that he's going to tap to be the person that takes over his position, it's going to be a good person, all right? This company, uh, it's going to make a lot of money, and it's going to be a leader in the field. But it's one of those things where stocks go up and down. Things happen. This is why we take big chunks when we sell covered calls. This is why I take big chunks when I sell cash secure puts. Is so that I'm protected from stuff like this. All these overreactions, I'm protected. And then if I see that, the stock weakens even more for whatever reasons, I can roll over and take, more collateral off of the table if it's a cash secure put type of situation, and I'm protected even more. So don't be afraid when a stock that you've been looking at, there's a hit piece written against it, or it goes down for whatever reasons, right? Unless it's one of those reasons that the CEO was caught insider trading, or the company was cooking the books. Of course, you sell. All right, you definitely protect yourself that way. But that's not what happened here. It's just the numbers are not as great as expected, and they're being honest, just like every other company out there. They're telling you our numbers are not going to be the greatest coming, down the pipeline. They're not going to be as good as they've been because we have a weaker overall economy, and companies are scared to spend right now. Okay, we have high interest rates. Until the interest rates get cut, not much is going to happen. But this is not like a thing that's specific towards C3.ai, right? This is like overall. So don't be afraid to go in and take, a big chunk of money, free money, for getting into the C3.ai um, world. If that's what you want to call it, right? If you want to take a bigger position, or if you've been on the ropes because you wanted it to be a little cheaper, right now is the best time to to get in a position where the stock is cheaper. And why not? Let's see here. What else do we got? Well, let's see. Webull, I'm very excited to see. SoFi is actually looking really, really nice. SoFi is up 1% overnight trading. It's trading at 22.35. And the news that SoFi just gave us were, they now are qualified to have companies that are brokerage firms and investment companies. They're now going to be able to buy SoFi and be part of index funds, and ETFs. I mean, that's a big deal, right? Now, is this going to be like a big change? Is this going to be something where the stock is going to go to $30 in a week? No, it's not. But it's just telling you that now, companies that were not looking at SoFi at first for whatever reasons, they now have to look at SoFi and have it become a part of their portfolio because, it's actually a really good company. It's a good company to have in any portfolio. It's a growing company. It's a company that's making money and it's profitable, right? And I think that, I mean, if you've been on the fence as far as SoFi and getting involved and having Ed become a part of your portfolio, don't be scared to sell some cash secure puts on SoFi, man. I definitely would sell some $20, cash secure puts out to January, then try to bring in $200. That's 10%. That's free money. Do you want to put those shares? SoFi will be $25 by the end of the year. I'm telling you that right now. At least anywhere from $25 to $30, barring an economy crash, right, where everything just goes down, barring a really big market correction. Um, Excuse me, guys. We are live, so let's see what we got here. Hello. Oh, very good. Very good. Of course. Okay. Okay. Great. Okay. Bye. All right. So it seems like good news. Some good news for me. But anyhow, so yeah, SoFi. Don't be afraid to get in there and sell some 22 or $20 cash secure puts out to January. Some 25s for 485. I would ask for $5. Ask for $5 and for some $25 cash secure puts, get 20% a return on your money. What is wrong with that? You're basically daring the market to give you the SoFi shares at $20. That's pretty much what you're doing because you're putting $2,500 up front. You're asking for $500 for your kindness of believing in that company. So your cost basis is going to be $20. Now, what if SoFi is trading at $24.50 on January? You're going to get those shares, and you're going to basically end up, right off the bat making money. You can at that point in time sell some $27.50 covered calls for like a couple of months out, bring in another $2-3. And if you sell, you would be making, let's say for $2, $3, and you get those shares taken away. You sold for 25, you brought in $3, $2, say $2, that's 27, right? You're selling at 27 realistically, but remember, you got $500 right off the bat. So that's over $1,000. Like if you take all that into account, right, you're gonna be making like around $1,000 on that transaction, right, on those trades, just for having your money stashed away for a few months. You risk 2,500, you brought in $1,000 bucks. What's the problem with that in less than a year? Absolutely nothing wrong with that. You're in the stock market to make money. You're making money, and SoFi is the vehicle that can help you get there. All right, let's see what's up. What we got here? Hector's in the house saying good evening. Good evening, Hector. How you doing? Ray Sherlock is saying, hey, Savage, just turned in. We did well with sound. Thoughts on this week coming for the stock. I was going to cover that one next. Right now, I'm doing SoFi. Ricardo Canales is saying, Savage, Jabroni Brains is saying, what stocks you been buying lately? Well, I don't just go and buy right off the bat, right? I do cash secure puts in order to buy. However, I did go market for these two stocks because they were just really cheap, and it seems like they were hit kind of hard on some hit piece type of situation. And a buddy of mine actually has done a lot of research, and I looked them up, and it seems like all these heavy hitters are just buying it, just gobbling it up. So whenever I see that institutional buying is just insane, and it's like Charles Schwab or Vanguard, Chase, or BlackRock that are buying these companies. That's kind of my cue, because they're just they know that this company is going to make money and it's cheap, so they're just gobbling as much cheap shares as possible. And that's PROP, which is a Prairie Operating Company, and it's an independent oil and natural gas company which focuses on the acquisition and development of crude oil, natural gas, and NGLs. It focuses on unconventional oil and natural gas reservoirs located in Colorado, focused in the Niobrara and Codell formations. The company was founded in 2001 and headquartered in Houston, Texas. So the another one is Iovance Biotherapeutics, which is a biopharmaceutical company which engages in the development and commercialization of cell therapies as novel cancer immunotherapy products. So those are two companies that I actually bought at market price because they're just very cheap. And sometimes you just gotta buy the damn stock. It made no sense to me to do cash secure puts on a stock that's $2.11, right? It just made no sense to do cash secure puts on a $3 stock because it's taking a hit at this point, and I just see it recovering really fast. There is no way that I get put those shares, and if I do cash secure puts, usually it's so that I can get put those shares, and they're the market to put those shares to me. But I don't think these companies are going to stay here very long, right? So at that point, I have to look at the overall structure of the company. You look at what they're doing, what revenue they're creating, if any, right? And you have to say, this is how much money that I have on the sidelines. I'm okay taking this little bit of a position on this company based on what I read in the fundamentals of the company, right? And then you see what institutions are doing. Are they like staying away from it, or are they like gobbling it up like a mother, or like a mofo, right? So I'm into Iowa for 1,000 shares, and into PROP, Prairie Operating Co. For 300 shares. And I think I'm there now. I'm going to leave it alone, and I'm going to see how they react for the next month or so. And then based on that, I'm going to add more or see what happens. Another one of our darlings, at least mine, that I've been talking about for at least a year is Open Door Technologies. It was up 5.3% last Friday, and it was down to like in the 160s, right? in the 160s for a second last week, and that's when I started talking about doing cash secure puts on it and doing the 150s because you're daring the market to put those shares to your 150, and I think it was giving you for September calls somewhere like in the 30% type of return, and that's insane for a stock that's because I mean, yes, the stock is cheap, but if you do like I don't know 40 cash secured puts, you're talking about some serious cash, right? So let's say you did um, for September 19th, you sold the 150s, which at that point was like 35 cents, I think. And I was telling people do a stink offer of like 40. So, right, you sold, even if you would have gone at 35 and you sold 40 of those, you're bringing in $1,398, right? Or $1,400 basically. So, I mean, that's a cheap stock, right? It's bringing you a lot of money. Those $1,400, you could have done whatever you want with. You could, pay your mortgage, pay your bills. I mean, you make it real, and then you're daring the market to put those shares to you. You know, in September at 150, and if you get that stock at 150 on that date, let's say the stock's trading at 130, 120, 145, whatever. You get those shares, you automatically go and you could either sell right then and there because you've already made money, and then write more cash secure puts at 150 for like another month out, bring in another, another month out, and you bring in another 1,400 bucks or 1,500 bucks and have it do the same thing again. Or you could do covered calls, and then instead of, you're on the other side of the trade now, right? You instead of bringing in 1,400 bucks cash secure put money, you'll bring 1,400 bucks on covered call money, and there the market. You could do that 175. So I don't know if it's selling at 175, but let's just for shits and giggles see what open is giving. Let's see here. I have so many covered calls and cash secure puts that sometimes it's really hard to just get to the one. So let's see. You view options. Say, for example, you decided to sell covered calls, right? The $2 covered calls right now for open are giving you 34 cents. I mean, what's wrong with that? Imagine selling 20 of those. You're bringing in 679 bucks. Nothing wrong with that. Don't like that? Why not go to January? Sell some January covered calls, sell some $2, and try to bring in 65 cents. You do 65 cents, 40 of those at 65 cents. You bring in $2,598. I mean, dude, that's how you do it. That's how you were able to generate money out of thin air. And basically using stock that you already own and are willing to sell it at a price where you feel comfortable and that it's, hopefully more than what you bought it for. That's the name of the game. Let's see here. So, Ricardo now saying Savage, Jabroni Ray saying, what is it? Damn Savage, yup, noise. Tanner doesn't like open. I don't care what Tanner likes. I like what I like. Because the founder left. That is his, he could like it, he could not like it, and that's his prerogative. I'm sure he's got some stocks that I don't like, but that's fine. Everybody goes into a stock that they feel comfortable trading at, right? And what's your appetite for risk, right? And I'm okay taking that dip because I've already made money with open. I think I went in kind of head first when I bought a shell of open at like 60 cents or like 50 something cents. I bought thousands and thousands of shares, and then when it jumped up to like almost $5, I sold a couple of thousand. I sold in the fours, in the 350s, in the threes, and I sold covered calls out to January, numbering like 65 cents per share. My average is in the 80s, so like if I sell at $5, I'm laughing all the way to the bank. So so many different ways to skin a cat, right? Let's see here. So Unity. Unity is another other companies that I really like, and it's overnight it's down a bit, but Unity under 30 bucks is a gift. Unity is a great company. I really like it. I've been trading it for years, and it just keeps bringing me money, man. Um, Buying that under 30 and then selling $35 covered calls whenever it jumps out 3, 4, 5, 6 months, bringing in all that chunk of change and then letting it do whatever it does. Great, great company to trade. Um, I mean, analysts have upgraded it, right? And it did well during earnings. It's just, I think right now the market is just iffy. However, you know, um, you're going to have to do your own due diligence and see if it's one of the companies that you're willing to trade for 5 years or more. RXRX, company that I really like, Recursion Pharmaceuticals. It looks like it was just in a $6 range. It's taking a bit of a hit. It's in the 530s. I think it's a great company. Selling some cash secured puts to September, maybe the fives, and asking for 50 cents. Not terrible at all. Bring in 10%. You're basically buying there at five. You're daring the market to give you these shares at $5, and you're bringing in 10% for your troubles. Absolutely nothing wrong with that. So basically, your overall cost really would be 450. So you're basically buying a great company that's heavily shorted, that doesn't have that many outstanding shares, low float, um, for $4.50. That is not terrible at all. The lows are higher now with RXRX, and it's just one um, one good news, one bit of one cycle of good news away from being in the $8 land. Nobody really knows about RXRX right now. So all right, at this point, I am just adding to my position. And I just keep doing that. I think I have like 25 cash secure puts expiring in September. I have some $7 cash secure puts that I may roll, and I have some $6 cash secure puts, which I am going to definitely um, dare the market to put to me because my cost basis is under $3 now. I rolled over the $6 cash secure puts so many times now that I think my cost basis would be under like $4, like in 350. So I'm totally okay getting the shares now. I want the shares. And then I'll see how it reacts. And if for whatever reasons, end up seeing $7 or $8, I'm going to sell some $10 cash secure puts out to 2026. And that's the plan, right? Whenever you do trade a specific stock, you have to have a plan, so that you don't get caught flat-footed, right? And remember, bears make money, bulls make money, and pigs get slaughtered. So don't get caught blinking around, um, trying to be greedy, and then the stock just goes up, and then just tanks on you, and then you're caught flat-footed because you were trying to be, piggish, and now it's just like you're holding the bag. You don't want to do that. Um, this week it's gonna be a little bit of a bearish week. I feel. I'm looking at excitedly at what GME has to do. GME is just at a crossroads right now, and I have some $23 cash secure puts expiring in October, and I'm just letting them decay. I have some $30 cash secure puts expiring in January. I'm letting them decay. I'm trying to dare the market to put those shares in my name because I'm just trying to add to my positions right now. Um, Millionaires, like real millionaires, are not made during bull years, bull markets. Really, 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 really rich people are made during bear markets. And right now we've been frothy, right? But I've been saying it. It's just a matter of time before that shoe drops, and bam, we get a nice 10, 15, 20% correction. It's just a matter of time. If everything is telling us, right, that the market right now is nervous, Companies are, their guidance is down, their guidance is lower than what it was. Some companies don't want to give you a guidance because they feel like, they don't know where we're going with this market, right? Everything's in flux, and the market doesn't like uncertainty, and right now everything is uncertain, and that's the key word, is uncertainty. But don't be scared, man. Don't be scared to trade. Don't be scared to take a position on a company that's beat up, especially if it's a really good company. Because, you know, yeah, Nvidia can only keep up the market for so long, right? Tesla can only keep up the market for so long, but even Tesla shit the bed during earnings. And sometimes good companies are going to have good earnings and they're going to go down. And sometimes bad companies are going to have bad earnings and they're going to go up. Nobody knows what the market's going to do. But this is why you need a plan. This is why you have to have a plan and say to yourself, I have this money on the sidelines. And if this specific stock that I like, it's trading at 20, if it hits 16 or 15 bucks, I definitely would go and buy, it. And you don't even have to buy it right then and there. You could do $16 or $17 cash secure puts, because if you really like that at 20, why wouldn't you buy it at 15? It's dumbfounding to me and confusing when I hear people, you know, that really were into Tesla, right? And said, "Oh, Tesla's too expensive at 400. I'm gonna wait for it to be 300, and then I'm gonna shop, right? And I'm gonna try buying it, and then Tesla craps the bed and goes to like the 200s, and then they say, well, maybe I want to wait for it to come to 200, and it doesn't go to 200. It stays like in 230 land, right? Um, and they don't take a position. They could have easily done $200 cash secure puts if the stock was like at 230, right, or 240 or 215 even. They could have easily done $200 cash secure puts and gotten in the game and dared the market. $250 cash secure puts out to like 2027, brought in a ridiculous amount of money, 30% easily, and dared the market to come and grab them. And here it is, Tesla now at 320, and they're waiting for it to go to 200 again. Now, will it see 200 again? We don't know. Nothing's for sure, right? But we do know for a fact it's 330. So it just shut the bed and went to like $301 like 2 weeks ago, right? That could have been the time when somebody could have said, you know what, I've been looking at Tesla for a year or two. It was like $450 and now it's at 300. Let me do some 300 cash secure puts out to 2026 or 2027 and bring in another 30, $40. So realistically, I'm buying it at 260, 250. But nobody knows what the stock market's gonna do, man. But take a position. Don't be scared. Have a plan. That's the best advice that I can give you. Let's see what we got here. General Bruni Banks saying, "Dale, man, that's great." Yep. John Hapster's in the house. John Harpster, what it is, my friend. Good evening. I hope you're doing well. Dude is in the house saying Savage. Jude K is in the house saying evening, Savage. Good evening, my fellow simpleton. I hope you're doing well. John Harpster is saying it's hunting season in the market. I agree. Whenever the market is showing weakness, whenever the overall earnings for all these companies is the forward-looking numbers are looking weak, right, or weaker, that is your cue to start getting ready and start getting, the whole pile of cash that you've been setting aside, which should be like around 30 to 40%, right, of your overall portfolio. Whenever there's a big downturn of like, 15, 20%, that's when you go in and then you take maybe half that money. This is obviously not financial advice. This is something that I do, right? But I take half that money and then I go into like cash secure put mode on companies that I really have been looking at that are attractive to me. Example, Tesla, right? Nvidia would be another. Nvidia is kind of high right now, but if Nvidia, when Nvidia was at like $100, I was telling people $90 cash and cure puts and $100 cash and cure puts out to 2026 will be insane right now, and they were giving a huge premium. Right now, that's free money. Nvidia's at 170, right? You would have made a killing. Same thing with Palantir. Palantir was like around $20, $30, and I was telling people, do $20 cash and cure puts, do $30 cash and cure puts on Palantir. It's free money, and I always say that I love free money. But again, there's always another stop. You don't have to beat yourself up. If you miss the bus on Palantir or on Nvidia or on Tesla, man, don't beat yourself up about it either. There's always another stock, right? Look at SoFi, for example. SoFi sitting at $22 right now. Okay, ETFs are going to start looking at it seriously. Right now is the time when you can say, I'm going to do some $25 cash and cure puts out to 2027 right now and bring in a ridiculous amount of change. Now, if we hit a downturn, SoFi may go low, right? And it could go to like 17, $18, right? But you have until 2027. Let that time happen, right? If people were buying SoFi at $25 and by the millions, they were buying it in 24, 20, why wouldn't you buy it at $20, 21, 22? Why wouldn't you do $20 cash and cure puts or $25 cash and cure puts until 2027? Everything is telling you that SoFi, quarter in and quarter out, they're crushing every single earnings call in all metrics. And I'm not talking about just one thing. All metrics, they're crushing it. Why wouldn't you? That's a company that you can take a chance on, right? I have several thousands of shares of SoFi. Well, I'm still going to get some more because anywhere under $25, SoFi is a screaming buy, man. It's just my prerogative. Is obviously this is my opinion, but everything else the market is telling you, like every earnings call is telling you, SoFi is a $50, $60, $70 stock, man. It's just a matter of time, right? Like you have to have patience. You can't just say SoFi's $50 and wait for it for like a couple of months and say, why is SoFi not $50? That's not the way it works, right? You have to have patience. You have to give it time. Meanwhile, get paid to hold the stock. If you buy SoFi at $20, right? And SoFi runs to like 24, $25, sell some $30 covered calls out, 3, 4, 5, 6 months. Bring in a couple of dollars for your troubles, right? And if SoFi runs away from you and those shares get called away, you make $32, $33 per share. Do it again. If SoFi's sitting at $30, $35, sell some $30 cash and cure puts. Dare the market to come back. You make money. Keep making it. It's a money maker at this point, right? So it's all on what you want to do and what type of plan you have. C3.ai is sitting at like $17, $18 right now. That's a great opportunity on one of the best companies that is out there. C3.ai was actually taking contracts away from Palantir a couple of years ago. The only reason that Palantir is making a ridiculous amount of money is because of their closeness to the White House, right? And all these government contracts they're signing, right? But again, it doesn't mean that. SoFi. Palantir is where it is. And that Palantir is at like $160, $170. That's what it's worth, right? So get paid. Right now, I would be, if it wasn't because I already sold covered calls against every SoFi or every Palantir share that I have. 1 second, guys. Hello? All right. Robocalls, my friends. And one of the perks of being on the live is that I'll get some some phone calls. But anyhow, um, like I was saying, Palantir. You're holding Palantir. I sense weakness in the market. I sense that it can only. I mean, look, it doesn't mean it's not going to go to 200. Some people are waiting for it to go to 200 to sell. Sell some $200 cover calls for like 2026, June or March, and then bring in money now so that you can take advantage of whatever opportunities there right now that the market is giving you. You can go and use that money to buy other stocks, do cash secure puts on SoFi, on Webull, on C3.ai, which is a direct competitor to Palantir in a way. It's right there. Much, much cheaper, 1/10 the price. It's right there. It's just about the opportunity you taking advantage of it, right? What do we have here? Dude is saying, looking like a premium printing week to come. Let's go. I agree. Definitely looking like a premium printing week to me, man. I'm buying back a lot of cover calls for sure on C3.ai. I'm buying some 2026s and 2027s. I'm ready, man. And I'm gonna do some cash secure puts and get paid that in that way. Simpletons unite and take over. I like it. The army of simpletons and degenerates. We're here, man. We're here on a Sunday evening waiting. I'm just licking my chops right now, ready to have this market open tomorrow and take advantage of all these friggin' gamblers out there. And then just crush their hopes and dreams and get paid for it. Because if it's not me and it's not you, it's someone else. Might as well be me and you, right? And use that money for us to like live, man, and make money and pay for our bills, right? Our cell phone bill, our gas and electric bill, our rent, right? Mortgage on a house, your car note, your cell phone bill. I mean, any type of medical expenses that you have. Schools back in so that you can buy supplies for your children. You can donate supplies to the school. I mean, there's so many things that you can do with this, premium cash that's coming into you. Or you can buy more stock and just grow your portfolio. This is the route that I decide to take. It's just I just grow my portfolio and it gets bigger and bigger and bigger. And although it may not seem like it makes a whole lot of difference if you're just starting out, right? If you're a newbie and you have a couple of $1,000 in, don't despair and don't try to rush it, right? Keep putting money in, man. Keep putting money in. I'm one of those people that is a big believer in working as much as you can so that you can dump as much money as possible into your 401k, number one, and into the stock market because your money will grow a lot further in the stock market than it will in a little CD account at your bank. The banks, the big banks, they do exactly what I'm doing here. They do what we are doing. They take all these billions of dollars that they have and they put it as collateral on stocks like Nvidia, Microsoft, Tesla, and they do 500, 600, 1,000 contracts, and they bringing all that premium. So then the bankers could say, I just brought in this much money for our bank. I want, a $250,000 bonus. They are able to then justify their $4 million, $5 million a year salaries that they pay themselves, doing the same thing we are doing, except they're doing it with other people's money. And this is the kicker. If they make money and they're in the positive, they get a nice chunk of bonus. If they don't make money, right? If they don't make money, they still get paid because they'll still charge those people that have portfolios in that bank. They'll still charge you a fee. That's how they're able. I mean, this is the greatest hack of all. It's actually knowing how to generate money using your own stocks as collateral. And that's why we're here. This is why we're here on a Sunday evening. Although there's not many of us, it's like 20 people, right? But we're here, man. It's a very small percentage of investors that actually, can get it, right? But once you get it and you figure it out, it's quite the hack. You know, I was actually looking at the numbers that I've um, so far this year have made, and I've outperformed the market by 65%, right? And I'm taking into account the fact that I trade, my accounts and my wife's retirement and my wife's account, and it's over six figures, man. That's insane. That is a full time job. That's actually a few full time jobs. There are people that make $30,000 a year, $40,000 a year, and it's insane to me that I do this not as a job. Like, I honestly do this because I have a full time job, right? I do this, not as a hobby either, but like I do trade sometimes daily, but I'm not a trader. I'm an investor, right? And I do happen to look at my portfolio daily, and then sometimes I'm I look at opportunity and I see that I've made 30-40% in a couple of weeks. Instead of waiting 4 or 5 months, I can just take money off the table and then do. And I keep doing that. I keep making lateral moves, and sometimes I take little losses, but my wins are a lot bigger, right? My wins are just a lot bigger, and so this is exactly how you do it. It's not a sprint, it's a marathon. I started with one covered call, and I am not the brightest man alive. I'll tell you that right now. I'm pretty bullheaded actually, and sometimes my biggest my biggest mistake was able to sometimes say, I've made a mistake, and then taking the loss. It was hard to take because I just, like, it's money, right? It's hard earned money. You're like, I want the stock to change. I'm gonna give it more time because I know it will change. And then you just like trying to will a stock to change, and it just doesn't. And this trade goes against you. And then patience. I had to learn patience. So many times I actually jumped out of trades too soon instead of giving it time to like happen, right? Like I would write out a year, and like after 1 month I would see something, and it just didn't look quite right, and I was like, maybe I should just get out because I saw an opportunity elsewhere. And then 2 months later, that stock goes back to where I originally thought was going to go. So that's why I don't act too soon. I have a lot more patience, but I'm also not against saying that's a bad trade. I shouldn't have made it. So it's just, with experience, um, you're gonna be able to see those patterns, right? So if you're just new to trading and you've been trading for a couple of months or like a year or two, give it time. You're gonna start seeing that. Take 5 to 10 stocks that you really really like and trade them, all the time, and then you're gonna start seeing patterns, right? You're gonna start seeing patterns. Um, be patient and don't try to time the market. Let the stock tell you what to do. You know, if I would have timed the market with C3.ai or Unity or SoFi, um, it's just impossible. The stocks are just too volatile, right? But now, I'm able just to see how the stocks are moving, and instead of making all these proactive moves, right? I now start seeing how the stocks are faring. I give them time to do whatever it is that they do, and then I react to that by having a plan or two or three, right? So, anyways, that's it. That's it about that. Um, so dude saying simpletons take over and unite. Of course, dude is saying always make sure you have a pile of cash ready for that sell in May dip. So that's that sell. It may dip, of course. Seems to always pull back then and shoot up in the fall. Yeah, yeah. No, I mean, again, when you've been trading a stock a couple of years, you start to familiarize yourself with the way that it moves, right? and then you'll start seeing patterns, and it's okay. Then you can take your time and you can start writing, covered calls and cash secure puts, um, into those months that you know that the stock is going to move a bit, right? So you're able to capitalize on what you think you know. Although you're not timing it, at least it's a better of an educated guess because you've got experience with that stock, right? Um, so you're if anything, you're reacting to what it's done, and even then, it could still go against you. It could still not do what you think it's gonna do. But guess what? If you wrote covered calls long and got big chunks, same thing with cash secure puts, you're a lot better off because you protected yourself on the upside and on the downside. And this is one thing with Uncle Bruce. I had a one-on-one a couple of years back, and this is something that really stuck. And this is why I like to really take my time and marinate and then write down different strikes and see which one that I can take the biggest bite out of. Um, because he made it clear that first right is very important. That's why I don't do 19 cents, 23 cents weekly. I just don't do that. I like to take a big fucking chunk. And if it's like, for example, that cash secure put with C3.ai, if I could get 50% uh, back on that, writing a cash secure 1750 cash secure put out to 2027, that is insane. That is insane. I'm getting 50% back for a little over a year. Um, no bank will ever give me that. And that's why a right like that is so important. That first right has to make you feel like a winner. That's what he said. That's why that first right is so important. And when you write that, you have to think of the other. Remember, you are writing, right? But there's always going to be another person on the side of that trade. So there's two of you. You have to be the winner. You have to be able to say the other person out there on the other side of this is a fucking dummy. That is a stupid gambler, a stupid gambler that just took this trade. And you have to feel like a winner. That's the key to writing that first right, whether it be a cash secure put or a covered call. So if you can get that through to your head, right, and it clicks, you're already up. You have to plan according to that. And it doesn't matter what stock it is, because it could be any stock that you can write against. That first right is key. That first right has to make you feel like a winner, man. All right, so what do we have here? John is saying wide open to sell cash secure puts. Yes, cash secure puts are going to be beautiful. Dude is saying took your advice on the American Express Gold Card, got approved. I like that. I like the American Express Gold Card, man. It's such a workhorse, um, because you're able to use it in so many ways, right? If you're buying groceries, and this is where it gets beautiful. You got to become a member with wherever it is that you do your groceries. If it's Safeway or Stop and Shop or Winco, Food Max, wherever. Make sure you have like a frequent flyer card with them, right? Like so to speak. But make sure you have an account, because every so often they have specials where you know you can go on the app and then you click on all these things, right, to make sure you take advantage of everything, and you get some really really good returns. And sometimes there's promos where for buying gift cards is a big deal. um, Sometimes you get actually paid to buy gift cards. So with my American Express, every so often they'll have a sale on Visa gift cards, and they say if you buy a $300 Visa gift card, you'll get $15. So you buy a $300 Visa gift card, right? And basically for free, because you don't have to pay the fee for that gift card. Um, but now you have a Visa gift card that you can use anywhere. Now, 90% of the places where I go take American Express, but 100% of the places take Visa, right? You cannot use American Express at Costco, but you can use a Visa gift card. See, So, and if they give you, let's say, promos have 5x or 6x on let's say Safeway or Lucky's, right? Um, so you spend $1 on groceries, and you're gonna get 4 points on your American Express Gold Card, but you're also gonna get multiple points on your Visa. I'm sorry, not Visa, on the Safeway um, point system, right? The way that I use that is by whenever I use a Chevron, I use my points then and there, because if I use points and I say that and I put down my phone number, right? Because I've linked it to my my Safeway. They basically say, "Are you a Safeway rewards member?" And you say yes. I get 75 cents off on my gas per gallon. So if I buy 20 gallons, that's fucking what? So 75 times 10 is that's $15. So I saved $15 in addition to me getting all these points, and getting a Visa gift card that I can use at Costco. It's just there's so many ways, right? But like groceries being one, restaurants is another, and it gets you on the American Express portal, right? On their on the promo portal. So basically, you're able to go and once you have the app, you can just basically say, what are the promotions that they have, and they have some great promotions. Like if you spend, $30 at Dunkin' Donuts, you get $20 back. HBO is a good one. That's how I'm able to pay for HBO yearly. Every so often, twice or three times a year, you're gonna have a promo that says if you spend $99 or more on HBO, you get $40 back. And I'm able to do my yearly HBO subscription. I get the one that has no commercials, so I pay $150, right? And they return $40. So then I'm basically paying $110. Um, and then you can stack that with other promos, because if I go to Rakuten, um, I get sometimes 10x, and then I got my Rakuten. I have linked to my American Express, so like I get 10x means 10 points for every dollar spent. $110 would be 1,100 points. Then 1,100 points. So I've linked my American Express to Rakuten, so that means that's 1,100 points that is going back. They're now going to go back to American Express, which then I get more points through American Express. So it's just like, that's how I'm able to generate hundreds and hundreds of thousands of points every year on American Express. And then I use those American Express points when there's promos for Hilton to stay at the Waldorf Astoria. It's a hustle. And it seems like a lot, but when you've been doing it for as long as I have, it's just second nature. And I'm able to spend 2 weeks in Hawaii for free, like at the Hilton Waikiki Village for free. And because I have a credit card that gives me, diamond status with Hilton, I'm able to get a free upgrades, and then I'm able to get like $60 daily food credit. So like my breakfast is pretty much paid for. It's just it's a win-win for me, man. So yes, so you took my advice and you got approved on the gold card. I think that's great. White Feather saying, remember the old sayings, the market can stay irrational longer than you can stay solvent. And that's what they count on, my friend. That's what they count on. Andres de la Torre saying, hi, Savage and all. And is saying, well, it's up to us, man. So, yeah, guys, I'm very excited to see what the market's bringing tomorrow. I feel a little bearish, right? And there's nothing to be afraid of. Don't shoot your loads just yet, but definitely dip your toes in the water, right? But there's companies right now that like are getting hit big time, and I don't see a problem with going in and taking a nice position, like C3.ai, for example, right? It's down 20%. Um, it's overreacting. It's just overreacting at this point, and take advantage of that. Take advantage of those. We need paper-handed weenie babies, right? And them not having uh, the stomach that you need to have to hold the stock. Um, and I think that you're going to be compensated for it. I know I've been compensated for it. taking it on the chin a couple of times, and then having conviction and knowing what I hold, and having done my due diligence and knowing that I need more shares and I need more shares and I buy more shares. And then that means I'm going to do more covered calls whenever the stock goes back to $25. You know, same thing with Unity. Unity was $14, $13 not too long ago. You gotta have conviction, players. You gotta have conviction. Palantir was $8 before it was $30. Then it went down to fucking $4. No, it's $7. $7 a share. $6 a share. I mean, imagine if you sold. Imagine if you sold at 7. How would you feel? Like there's people that are selling right now. C3.ai at 18 and 17 and change. Then they've lost money. They're tucking their tail between their legs and they're walking away. And they have no idea that they were just giving us this stock. It's just beautiful. I love overreactions because it's just I'm able to capitalize on them. And you should too. Don't be scared to take a position whenever there's blood in the streets, because that's when you make the money. That's when you grow your portfolio really massively, is when you're able to buy when others are fearful. Remember, this is something that Warren Buffett says, right? Be afraid when everybody else is greedy. And when everybody else is afraid, be greedy. With that quote, you simpletons and degenerates, I will leave you guys now. It's been over an hour. I really wanted to do like just half an hour, but I have a nice little couple of people here, and yeah, Andres de la Torre is saying, "Oh my, C3.ai is down 13.7% after hours. Not good. What happened?" Well, they were able to they leaked some of their earnings, soon, and it's just overreaction. Everybody knew that companies are going to have their numbers in the future are not going to be as good, right? So it's all about guidance, and we all knew that guidance is not going to be as good going down the line as it was in the past. Tesla, same thing. Guidance was a little weak. It went down to 300, but it's just recovered. Nothing has changed with Tesla. Nothing will change with C3.ai, my friends. Time to write cash secure puts. Absolutely. Time to write. And this is when you write 10, 15, 20 cash secure puts. You get a lot of fucking money and you buy the stock where it is. So you can average down. This is when dollar cost averaging is so key. This is what I do, not financial advice. This is what I do. This is when I write 10, 15, 20 cash secure puts, 1750s out to 2027, bringing a shitload of money, and then just go and buy 1,000 shares of C3.ai, 700 shares, and it just lowers my average. Great, and then you do whatever it is that you do, and then your average is down, so you're able to sell cover calls now. You wait for a day that the stock has kind of leveled off. You wait for the paper-handed weenie babies to stop crying, and you wait for people to get greedy again with the stock, and you wait for it to run 10, 15% on one day. And when it does, you sell your covered calls. And then you obviously sell them for more than what your average is. And you let the stock market do what it does. And then you let the stock either get taken away from you or you roll it. And you keep rolling and you keep rolling. And then you just wait. Or you could just let it get taken away, make money, do more cash secure puts. Either way, it's up to you. If you got to have a plan, right? But I'm for sure going to be writing some cash secure puts. Misty Tree Woodcraft is in the house. Ahoy, I just saw your live Lucky 18. I shall be kind of and rewind. So good, my friend. I appreciate it. Be cool, people. Keep writing, as dude saying, and I agree. This is the type of market that I enjoy because it's so volatile and everyone is afraid. And whenever everyone's afraid, I'm like a madman. I'm just dumping money into the stock market. This is when I take out. Well, not yet, but when the stock market as a whole takes down goes down 15, 20%, that's a big correction. That's when I usually take out a loan and I'll look at stock that I really like and I buy stock on the cheap, and I use cover calls or cash secure put money to start paying off the loan. That usually is a 16-month loan with 0% APR for 16 to 18 months, and before you know it, I paid off that loan in less than a year, free money. That's just the way it is. Anyways, my fellow simpletons and degenerates, it is time for me to get going. I'm gonna go and see the kitties, see what they're up to, and I'm gonna go be a dad now. So great seeing you guys again. Great seeing that you guys are watching me. I will be on tomorrow morning in at 8:30 a.m. my time, which will be 11:30 a.m. East Coast. And then we'll see what the stock market's doing. We'll see how people are trading, and maybe you guys could give me some insight on the different trades you guys have for the day. We can talk shop, so to speak, right? And see what stock market is going to give us, man. And then talk about our wins and lick our wounds when it comes to maybe some of our losses, and that's cool. That's what the community is here for. But either way, we're going to be making money. Make no mistake, we're going to be making money. So Larry Titus is in the house saying hi and bye. That's what's up. Andres saying thank you. Savage, you're welcome, my friend. Jude K saying take care all. I agree. All of you guys. I am the Savage of Wall Street. Thank you for watching. If I can recommend a movie though, the Wolf of Wall Street is I think on YouTube. So if you guys can see it, it's a great movie to watch. I think it's on Prime as well. I'm not sure, but I'm going to be watching it today because I really need to. I really need to get some inspiration, man, and see what the stock market gives us tomorrow. And so then, thank you so much, you savages. I'll be seeing you guys tomorrow. Until then, please have a great night. Take care of each other, and peace out. See you tomorrow, 8:30 a.m. California West Coast time. Peace.